Everyone, Terry Guthrie here with RWM Home Loans. I hope you've been enjoying my channel here. Today we're going to go through a couple of self-proclaimed experts here on social media, and I'm going to tell you if I think that they are right or wrong.
What's a better question to ask? Everyone's talking about the rates and the prices. What do they really need to know? What have you seen the question that really gets them like, okay, I'm in good hands?
So I am all about choices. I believe that I am here to educate my clients so that they can make the best informed choice for themselves. If someone says, do you think this is a good idea? Okay, well, let's talk about that. Typically when someone comes at me with what are the rates, I'm like, okay, well, it depends. Yeah. Would you like the lowest rate, the lowest payment, or the lowest cash out of pocket? Well, isn't it the same? Nope, not even a little bit.
So I agree with that. My philosophy in regards to someone asking me, hey, Terry, what are the rates today? Well, that depends on a lot of variables. Your credit score, the type of loan you're getting, how much you're wanting to buy, what your debt to income ratio is. So I agree with the fact that, you got to give your client choices. So, I give my client choices. Do they want down payment assistance? Are they wanting just a traditional FHA, conventional loan? I also want to let people know what their payment's going to be. That's the whole thing about getting pre-approved. What's your buying power? And then also to, they need to know what their monthly payment's going to be, that's going to include taxes and insurance and mortgage insurance. People don't understand that. And then also the end, what is their cash to close? How much are they going to have to come in with at the end? People don't like surprises. They don't want to, get at the closing and you've told them that they're going to have a $2,500 a month payment and their cash to close is, $10,000. They get at closing and all of a sudden their payment is, $2,800 a month and they need $20,000. That's very unnerving to a client. So, I agree with that. Give your client choices, but also educate them through the process too. All through the process. Let them know, the ups and the downs, the negatives, the positives. I think that you have to give them all of those choices. So I agree with that video.
The worst mortgage advice I've ever heard is just keep borrowing. And that's coming from a lender. I love being a mortgage broker because it creates value in other people's lives using other people's money. But the end goal is for my clients to own everything in their life and not borrow for the rest of their life. Being over leveraged is never a good thing. That's why we created the term over leveraged. It's all about balance, just like everything else in your life. A little bit of borrowing, a little bit of ownership. Balancing them together is going to create wealth. Over borrowing is going to create nothing but stress, and you'll never have that satisfaction of owning anything your entire life. Advice I've never heard is...
So I agree with that in the sense that you have to have balance in everything in your life, including your funds, your debt, your ownership in cars, homes. One thing that I run into a lot is, obviously debt to income ratio is too high. So people don't qualify for a certain amount of money because they've got 3 or 4 car payments. They've got their own, they've co-signed for a child, a family member, and they don't realize how those car payments affect them. They've got student loans. They may be deferred, but we still have to hit you with a payment even though they're deferred. Also, the other thing is they, a lot of people too that don't have credit, simply like they'll go pay all their debt off and then they'll tank their score. So, you have to find a balance in that. If you're going to get credit cards, make your payments on time. Don't overextend yourself. You don't want your credit to be over 30%, your actual credit card debt. Keep it below 30%. But then too, you do have to have some revolving credit because if when I run your credit and it shows that you don't have any credit, I've had people that can't get loans because they have no revolving credit at all. I send their loan into underwriting and they'll come back and say that they don't have enough credit. So I have to send them out to get credit. Sometimes I have them put their name on a family member's credit card just as a user so that they can establish a credit score even. I've done that with clients. So with anything, with your credit, like anything in life, you have to find a balance. Okay, I agree with this, definitely. You definitely want to ask the seller for closing cost concessions to bring down your payment instead of bringing down the price. We're in a very pivotal market right now. We just turned to a buyer's market, so I'm seeing a lot of my buyers asking for closing costs. It's making it available for them to come in with almost zero down, especially if they're using down payment assistance. If I can get them up to 6% assistance and then some kind of closing cost credit, that's definitely going to be able to help them to buy the rate down. That is what controls our payment. So if I can get them, from say 7.25 and they can buy the rate down to, the 5s, that's going to drastically bring their payment down. And that payment shock right now is what's really, making it hard for people to afford these payments. Hopefully the market will, come down too, so that our affordability on homes is going to help with that. So I definitely agree with this video. Ask for seller concessions, and hopefully those sellers will start to see the light at the end of the tunnel. They're gonna have to start giving. So it looks like there are some experts out there on social media, and I agree with their advice. So if you're looking for some expert advice or you want to chat, reach out to me. Also, feel free to like and subscribe for more information.